Going to the market today, we had Fed minutes coming out, and we actually saw a little bit of bleeding. I want to start out by saying that I was not necessarily correct in my video yesterday, although I wasn't completely wrong, but I do want to highlight and say that I definitely got today wrong. Now, what I did say about going over key levels, those did play out to a T. However, you just never got back above the levels like on ES and Nasdaq. But today I want to give a better viewpoint of larger time frames into what is setting up going into the end of the year and do a recap of Fed minutes, which were so important. Before we get into that content, I have to ask you to consider doing two things: liking and subscribing. Every single day, I give you my viewpoint of the market, how we're moving, what to expect going into the next trading day, and stocks I'm liking as well. Now, when we come back over here, I want to address a few things on the daily time frame. Now, from the daily time frame, we have to highlight some levels that we've been talking about in targets. Now, on ES, our key targets we've been talking about for basically a month now, we're getting back to the $4,300 level, which we hit yesterday and today and the day before. Going on to the Nasdaq targets, it was really 13.5, 13.6. You hit it, but you came up to 13.7, which we also mentioned later on, and then you got rejected so far right there. But when we come back to ES, the focal point here is going to be about the daily time frame and what's really happening at this level. You are seeing a little bit of turbulence and rejection right now. Going into the 4-hour, I think it paints an even better picture because you can see that you actually get above, you come back down, you retest, and now you're rejecting. That's a little bit cause for concern. However, my viewpoint stays the same. Until GDP, which is next Wednesday, you have to anticipate upside. Why? Because there's no real negative news coming out. And as we go over GDP, you're going to see that there was no real negative news impacting us right now. And that's why if you go to S&P and look at the SPY on the 15-minute chart, for instance, when Fed minutes came out initially, what happened to you? You got that move up. You started moving up pretty volatile. Like I said, and I kind of mentioned even in Discord, I didn't take any trades today, but when I was looking at this, I was saying to myself, you'll get some downside, but going into Fed minutes, you're probably going to get upside because there's not going to be anything bad to be said. So also saying that as well. Remember, we do have midterms coming up. This is very big for the Democrats. They need to do as best as possible. This is very crucial for their re-election process going on in 2 years. However, when we talk about this, stay with me. So we're getting into this specifically on what's happening with Fed minutes. I want to highlight some things that were said by Walter Bloomberg, and basically they just go from the terminal and highlight key points. And then I want to highlight one key area that is the concern for myself. Now, Fed minutes, let's talk about this. So basically, right out of the gate, I recommend following this guy. If you don't, Delta One on Twitter, he's one of the people that I follow, so it's really easy to find. Going on here, we saw some increasing on federal funds rate, which this was kind of shocking. Some people thought that after we hit their target, getting like about another point going to the end of the year, that they would stop raising rates, potentially even cutting them. They said anticipate ongoing increases for federal funds for the foreseeable future. Fed officials saw a slower pace of rate hikes at some point. This is the key point, though. They keep saying at some point. There's no time here. There's no ETA. I would assume that they're going to wait until inflation actually starts slowing down. And we're going to get to what's happening with the slowdown process because you're probably saying, Tyler, isn't it already slowing down? Officials say move to restrictive policy required. Very interesting as well. Bulk of tightening effect yet to be felt. Again, when it comes to tightening, they're still doing the reverse repos. They're still helping out banks. They have not started the tightening. We have not felt that yet in the economy. So this is something that we really need to focus on as well. But I don't think it's going to hit us right now. And I think it's important to know as we go into the second part of this video that you understand that there's a lot of things the Fed still has to do that they have not done. And I don't think we're really out of trouble when it comes to oil. And we need to talk about that here as well. Participants emphasize that slowdown in demand would play an important role in reducing inflation. And they're not talking about emphasizing a role in demand regarding oil. They're saying in general, because demand will decrease as inflation progresses, as wages slow down. As of right now, wages are following inflation. So people are making more money while inflation is going up. And no time in history has this ever worked out. Wages always slow down before inflation ever slows down. Look at any point of a recession in history. Staff projection for the economy noticeably weaker in July than June. This wasn't that big of a statement. They were just saying that everyone thought the market was weaker in July than in June. I mean, just go open your eyes and look at the stock market. You were dropping. I mean, it's kind of clear to see that. Nothing really big to see there. And then this is the biggest factor of all. Fed staff expects unemployment rate to start rising in the second half of 2022, which is right now. So they anticipate people will start to lose jobs, unemployment will go up, people will struggle to get those jobs. Now, we've also talked about this quite a bit. You're going to need unemployment to rise to get out of this inflation issue. You're going to have to go through pain to get to the joy. That's just what happens. That's the part of a recession. Now, this is the arguable most important part of all in Fed and whatever they were saying here. If you go down to page 8 of the Fed minutes, I'll have a link down below if you want to read the Fed minutes for yourself. Pretty boring read. But if you get down here, start at the last, I think it's about the second to last sentence. Participants remarked that although recent declines in gasoline prices would likely help produce lower headline inflation, which is what we're seeing right now in CPI, in the short term, declines in the prices of oil and some other commodities could not be relied on as providing a basis for sustained lower inflation, as these prices could quickly rebound. Now, why is this important? You go in here as well, and what I do, just if you don't know, just Control F on your computer, you can pop this up and you can actually search keywords on this writing. Now, as you get in here, I want to highlight down to where we saw with them talking about Ukraine. The reason why oil was going up so much is because what's happening in Ukraine with Europe. If you don't know, basically all the natural gas in Europe is supplied from Russia, which that's been turned off now. Indicators for June show that the Chinese economy rebounding and lockdowns were eased. The global economy, however, continued to face headwinds from disruptions in the supply of energy. Elevated political uncertainties in Europe and tighter global monetary and financial conditions. Although most commodity prices moved lower from elevated levels in recent weeks, foreign consumer price inflations continue to rise. They actually just changed the CPI prediction for Europe to 15%. That is almost double what America is sitting out right now. So imagine everything you're spending right now is double in price for those in Europe. June, mostly reflecting past increases of energy and food prices, but also continued broadening of prices pressures to core goods and services. Many foreign central banks tighten monetary policy to address high inflation. Okay. Now, it's also important to realize when they tighten their monetary policy, they're raising rates faster than they have ever done in Europe as well. Now, when we come back to this, I'm not trying to scare anyone, but I want to show some key charts. And this is one of the few, we haven't done like some heavy DD here in a while, so I think it's probably best for us. So what we're going to do is go to the barrel. This is oil. We're going to go to oil on the daily time frame. I want you to follow me here. So this is the daily time frame on oil. And as you can see, you are pushing down. So I'm actually going to mark this, and you're going to find some familiarities with these dates. So your top right here is locally around June 10th. Now, we also know what happens with oil and your gasoline prices. We know that there is a delay. So if oil drops in price, that's why if we go back to July CPI, it was actually, or June, it was up, and then in July, it went back down. So in June, you top off here. Now, if we go to the SPY, let's look really quickly at the SPY. When's your bottom date? A few days after, you come back down, and then this is really when you start to bounce back up as you start getting some of that data there in July 19th. Now, again, we go back to US oil. What's happening? Consistent decline, people. Consistent. You can actually see that bounce up that you had right here as well with some of the markets. Okay. So if we line this up, what we're going to do, we're going to exit out of this real quick. We're going to add the S&P chart. We're going to add SPY. Okay. We're going to add this to the chart so we can see this crystal clear. Okay. So just stay with me. I'm going to try to break this down as simple as possible. I'm actually going to change this to a candle chart so you can see it a little bit clearer as well. Now, just what do you see here when we really look? We can see, if we time this out perfectly, that the SPY bottoms 2-3 days later after oil tops right here and then rises back up. This entire move right here coincides perfectly with oil coming down. Perfectly. There's no doubt about this, okay? Now, what happens when oil starts to find a key support? And what support am I talking about here? Oil is coming back down to November, which is 2021 highs. So I'm just going to get rid of this SPY real quick. If we go to the daily chart, this is your November highs. basically October as well. And this was your high of 2021, the yearly high of last year. And you're finding support here. Now, with oil prices dropping, when I take this into example as well, you had all your prices rising here, right? Now, when these were rising, obviously oil companies, Exxon, Diamondback Energy, Oxy, US Oil, whoever you were trading, right? They were all mooning. Now, when they started to drop, oil companies dropped as well. But somewhere there was a detachment from reality from these oil companies because they knew that America was basically manipulating the oil market to manipulate inflation, to show it coming down lower, to try to help this from blowing up in our faces. And what happens? You bottom out here. On July 18th, right here, you bottom out. And guess what happens? They all start rising back again. So Exxon is on its way back to local highs or all-time highs around $105, $100 level already with oil in the trenches. What about Oxy? Oxy, Warren Buffett's most beloved oil stock, is right there as well. $63, highs of $72, $10 away. What about something like Fang? This is one of the West Texas oil stocks. It is down a little bit, but it is also finding love, finding support. As I actually mentioned this earlier in Discord as well. Now, these oil stocks, investors know that oil is going to rally back. Now, what about natural gas, you may ask? What's going on there? Well, natural gas has become the hottest commodity in all of the world, ladies and gentlemen, because guess what? In Europe, to survive, they're going to need natural gas, and because winter, in fact, is coming. Now, natural gas is going crazy. It's ballooning because what's happening, of course. I do think it's going to hit around $38 here pretty soon, but that's besides the point. They're going to have to start switching to alternate sources of energy, which could come down to nuclear energy, which uranium could be a very hot topic if it gets above 7.3. But the main thing to know about these indicators and what's happening, you're like, well, Tyler, what does this mean? You lost me. I don't know what you're talking about. What this means in the long-term grand scheme of things is if Europe is already in a recession, their inflation is looking to get to 15% by quarter number 1 of next year. They are in deep trouble. They're using the most expensive sources of energy right now. What do you think is going to happen to America if our primary trade partners around the globe are all in recessions? Yes, I agree with you. We're probably going in a same direction. And when it comes to oil, the price will start to rise again. And my question is what happens to SPY when this happens? So I want to start looking at a broad scheme of things. I've been talking about this a lot. And as we look at this, I'm not saying you're done with your upside, although I think a short-term top is most likely in until Wednesday. Next Wednesday is very important, okay? Next Wednesday is your GDP. That comes out good, you probably just continue to rip. Now, looking at this, you're at a high level here. I do believe, and what I'm looking for and looking to see is a retracement sometime pretty soon on SPY towards the 417, 418 level. What is that level? It is the highs in which we saw back in June, and it's the highs that we basically were testing before we had to break out to this 430 level, which we were calling, okay? So I want to see a retest of this level and kind of see what happens from that before GDP, which is next Wednesday. So I am looking for a 10-point correction on SPY towards that downside level. Now looking at Nasdaq, you're asking, what about here? When we look at Nasdaq, you're at a very crucial level. You've had a great run. We're looking for a retest, and you're already getting the retest of 13.6. You've already got it, okay? I want to see a retest of 13.3, but that could come a lot quicker than we could see it with SPY. So I want to see how we respect 13.3 to 13.2. You have to also realize that 13.1 is very important as well. Yes, it's those same highs that we had back in June, so it's very important. So this is also going to be top of the line as well. Actually, 12.9, 13 is actually a little bit lower, if you will. So we do have a few levels to watch here. But my primary concern here is going to be SPY. SPY is caught up. ES is caught up completely with Nasdaq. I want to see a retest and how you react to 417, 416. I think that's coming within the next week and a half. I could be wrong. I could 100% wrong. We can continue to rip. I don't know. But as we look at some of these big indicators that have helped us so much throughout, this move, now we got DXY bouncing at our supports, which we marked out, the dollar index. Guess what's happening with the euro? The euro is inverting. When's the last time you remember that the euro was worth less than the dollar? Well, you're right there. You're a penny away right now. About 2 pennies, actually. So 2 pennies away. It's about a euro's worth $1.02. Congratulations. What about junk bonds, people? Junk bonds, even though we bounced, junk bonds didn't. And this has been one of the ultimate indicators as well to starting to see some bouncing, to starting seeing some relief or seeing correcting on the market. Junk bonds, you're pushing down. Lower highs across the board. Lower lows getting established. Now, the only thing that has my attention to say maybe we have a little bit more room, maybe some chop, maybe, downside isn't in the works right now, is VIX. Because as we look at VIX, we've been targeting this key level for a while now. We want this to get down to 18, the low 18s at least. Okay, we want to see VIX down here. Once it gets down here, that's when you're getting set up for the shorting positions. You can start that, for me at least, right? That's what I'm looking at. You've been in this downward channel for a while now. And we've talked about this as well, is that you're bouncing, but you just get to that median level and you never do anything, right? You bounce median, come back, just back and forth. But now you're just chilling at the median level. So the question is now is, are we going to start cooking it back up, or is it going to start ramping back up with volume? That's the major question. Now, again, this video is a little bit different than most of them, so I'm not going to be going over real stock plays in today's video. We can cover some Tesla at the end, but I just want to know, it's not about finding the plays right now. It's seeing what's happening in the market to position ourselves so we're not getting screwed if we start taking a dump. Now, going over to Cheddar Flow, looking at some of the options chain. Again, this is probably a little concerning as well. Now, looking at the biggest orders on Qs today, we're back up to the 3.0 ratio. We've been more monitoring this. You're back to that bearish territory. 32 million in puts, 18 million in puts, 11 million in puts, 1 million in puts, 1 million in calls. It's a lot of puts there. Going to SPY, what's going on here? 5 million in puts, 2.5 million in puts, SPY back at 2.1 put to call ratio. You got two $1 million calls, but it's definitely in favor towards the downside. What about VIX? Coming in here, it's a lot of call volume coming in. So you're seeing a lot of people, they read these minutes and they're establishing their positions, or they're at least trying to hedge even more than where they were before. So this is just my overall take on this. I have no updated SPY put position yet. I thought about it on the day after looking at some of these candles and how we closed, but it's just under my opinion right now that I have to wait until we get some clear-cut data that's pushing us back to the downside, right? Because if we come back to ES and look at anything, when we were getting this major downside here, when bears really started to step back in, what happened? There was data points. You had CPI coming out, and it showed that inflation was rising. We come back here. What happened when we triple topped here? That was the first time we hit the 0.75 rate hike, and Powell said they're going to start doing bigger rate hikes, okay? So you have news coming out everywhere, but you have to just be paying attention to when you're going to get that news that's going to flip the script on the market, right? And so right now, I know people are like, this is a wedge, it's this, it's that. People were telling me this was a wedge for the past 3 weeks, okay? So I don't really care if it's a wedge, ascending triangle, or falling bull flag, or raging candle. I don't care. Whatever pattern you say it is, I could care less. All that matters to me are fundamentals, price action, volume. That's it. Nothing else matters to me. Now, for me, the fundamentals are showing in a broader term scheme, and I've been saying it. Although we're pushing up, we don't, and I don't think the bottom's in. I think there's trouble ahead. And maybe we don't make a new bottom. Maybe we just come down. But I think a new bottom will probably be established later on, maybe at the beginning of next year, whenever it is. But I don't think the blood's over yet because I don't think our issues have been handled yet, okay? That's my opinion. I think inflation's still a huge problem. So looking at this, these are the concerns. Now, I want to leave you with one thing as well before I let you out of here. We're going to look at Bookmap here in a second. But what I want to say is when we look at the housing market, we've also talked a lot about this. Housing market, you can Google it. We talked about it a little bit yesterday. Builders are finally coming to the point. Again, builders have been saying we're in the bullish market and we're going to build and sell homes forever. Now builders are coming to society and saying the housing market is hitting a recession. And I don't think it's hit yet. I don't think the housing market recession has even started. People are still buying. The issues have not even hit yet. But what did the Fed say? The Fed said there's two big indicators that we're in trouble. One, if we have to raise rates and unemployment rises at the same time, that's a huge issue, which they've actually gotten through this. So their plan's actually working out to where they're raising rates and unemployment isn't rising, but unemployment should start rising once they finish. Number two, They said the key sign to a recession is when the housing market starts to climb into a recession first, because at every point in time in history, the housing market has tended to lead that recession, right? So that's the big point here, is our housing market's going to struggle, and you're starting to see it play out right now. You're seeing it on the foreclosures list. You're seeing builders backing out of deals across the nation. I know specifically here in Houston, we're already seeing the effects of builders stepping out of positions, and I personally look to take advantage of that opportunity here in Texas. I don't know about you, but that's what I want to leave you with here. This isn't to be a bearish video yet, or saying we're going to the depths or we're going to break down tomorrow. That's not what I'm saying. There's really no prediction out of this video. It's to highlight key points that maybe we've been missing out on. And we came to our key level. We've hit our targets. Maybe there's some more targets on the horizon. Maybe we continue to run to 440, right? Maybe. But right now, I want to address it. I have a few dated positions on Microsoft and Netflix, but besides that, I have nothing. I am very liquid. I took no trades today. I sat on my hands, and honestly, I hated this movement. I hated what we got. Looking at Bookmap, it really shows you what I hated as well. So all day long, you're chopping back and forth from green to red on CVD, pushing down, pushing up. But at the end of the day, or actually, around 2 o'clock when you get that news, what happens? CVD pumps and then it just drops. So it was like you were moving up, but sellers were stepping in. So this was just a really big cause of concern for me. Now, what I will say is at the end of the day, you got some buyers on the icebergs and hidden order book, but it was mixed throughout the day. So I'm not buying the buyers stepping in here just yet, but I'm not pushing myself to get puts yet. I'm sitting on my hands. I'm being patient. I'm waiting for that news that we know is going to come. Some news will come. GDP is coming around the corner. If GDP comes out good, we just scrap it. We wait. We trade to the upside because GDP will carry us. If it comes out very strong, we'll just continue trading bullishly. But if it doesn't, be prepared, have your positions ready, and just don't lose money on this. I like to say this all the time. I would rather miss out on an opportunity than lose money on an opportunity. That's my model, and that's my trading methodology. Reduce risk across the board, and typically you'll win out. Have a good one, traders.